Since my last video, Bitcoin's price has gone lower and some altcoins have made new lows. This is giving the bears more conviction. The 4-year cycle enthusiasts are so sure they've got it right that prices are going to drop and find a low in October this year, and then they're going to all buy back in and they're going to ride the next cycle as the top would come sometime in 2028, 2029. Well, in this video, I'm going to show why I believe that to be wrong and why I believe what we saw so far for crypto was a mid-cycle peak similar to 2019, and why there's a broader, bigger cycle at play. The stock market is proving that, and we can believe that crypto is going to follow in suit at some point in the near future. So if that sounds good to you, come and join me for today's video, because I've got so many charts and ideas I want to share with you that proves the case is still there for a continuation of this crypto cycle, and that it's not really even got started yet for crypto. So without further ado, let's jump into this one right now. Right, welcome back to Prodigal Son Crypto. As you know, I like to look at the bigger, broader cycles. I'm not too focused on your day trading and what's going on in the near term. I just like to keep things very zoomed out. First of all, looking at things from a bigger perspective, and then start to work my way into the data. And I've got a few major cycle theories that I believe in. Okay, one being the 18.6-year real estate cycle. Then you've got the Shemitah 7-year cycle. Then you've got the business cycle, which is the economic cycle, which is the election cycle, and until recently was also the halving cycle for Bitcoin as well. Okay, that 4-year pattern, very important, but those 4 years sit within, you might get 2 of those 4-year cycles within a Shemitah cycle, which is 7 years, okay? Because the 7 years drags out slightly longer, and you may get a few of these cycles within an 18.6-year real estate cycle, okay? Now, one thing I'd like to say is, like, look at this list, and you can take a screenshot of this, all right? Because every 7 years you get some sort of recession or crash or something of those magnitudes. The next Shemitah is in 2028, 2029, okay? And the most recent one was 2021 to 2022. That was the post-COVID recession, okay? 2014 to 2015, the Chinese and Russia financial crisis. 2007 to 2008, we all know about that one, the US subprime mortgage crisis. Now, that was the last end of a 18.6-year real estate cycle as well. So that was the last time a Shemitah clashed with a real estate cycle, okay? And then you've got 2000, 2001, that was the dot-com bubble, 9/11, all of that disaster kicked off, okay? And you can go back down this list and see that, you know, that you do get a major event. And now a Shemitah will start in that first year mentioned, like the 2028, 2021, 2014, okay? And it's a year-long thing. It's a Hebrew tradition, goes back thousands of years, but I've traced it back here within to do with financial markets for roughly the last couple of 100 years, and there's evidence to show that it took place, okay? And I've read books about this. I've seen that major families and institutions such as the Rothschilds believe in this as well, okay? So, you know, talk about following smart money. Well, that's probably the smartest money you can find, okay? So, yeah, 2028, 2029 is where I see there being some sort of a crash, okay? Meaning that we've probably still got time in this bigger cycle, okay? Doesn't mean bear markets, short bear markets can't happen within that time. You can get year-long or maybe 6-month-long bear markets and stuff like that. But yeah, we're yet to see that yet, aren't we? So before we get into crypto and stocks, look at the US housing market, okay? This is the housing sector index for the USA, okay? Now, look back to where the top was found in 2005. 2006, cracks were beginning to show. Yeah, this started falling, okay? It wasn't until 2008 that everyone you know, this was the big news story, okay? So, you know, it shouldn't have been no shock to anyone in 2008, really, if they were keeping an eye on things. But the stock market topped when it was roughly halfway down, okay? Back in October 2007, okay? That's when the S&P 500 found its top, okay? Look what's going on now, okay? So 2024, yeah? And then 25 to 26, we're still in this pattern. It hasn't dropped down. Could it go higher? There's every potential it could. It's riding along this 50-month EMA. So I'm not seeing a sign of a breakdown yet, but we are still, and this, we were showing this in videos months ago, how this was finding some lower highs, okay, and struggling to break out. So be interested to see what goes on at the moment. It might be riding higher here, you know, but it's still lower highs. This could break down. And if it breaks down, just like in 2007, yeah, the stock market was still able to run while the housing market started to fall. And you know what? The 4-year cycle of this for crypto, okay, they think that crypto is in its cyclical bear market right now. It has been a bear market. You know, any period of downturn and a downtrend is technically a bear market, okay? So, of course, yes, it is a bear market of some sorts. But my argument is it's not the cyclical bear market where Bitcoin would spend the next, well, till October going down, okay? And then maybe a year bottoming out, okay? Another year to recover, okay? So what's that? So it takes to the end of 2026 to find the bottom. Takes till roughly the end of 2027 to sort of finish bottoming out. Then it's rallying into 2028, doesn't find a top until 2029. That's the typical Bitcoin cycle that they would expect. Okay, it's not like they're thinking, oh, it's going to bottom in at the end of this year, and then it's going to go off to the races for the rest of the year and then into next year. That's not the way a 4-year Bitcoin, a crypto cycle works. Okay, and so how are you going to get this long crypto cycle when the stock market is as strong as it is? And you know, as much as you might hear people talk about AI is going to be a bubble, I agree it is going to be part of the biggest tech bubbles we've ever seen, okay? And the last one of those looked like this, okay? Yeah, this was the NASDAQ, okay? All through the 90s, well, even from the late 80s and 90s, sort of ranging in this channel, okay? Around about 1996, 97, it broke out, and it rallied for another few years up until the year 2000, okay? Now, what's going on now is we've been in this channel here now since, sorry, let me drop that down, since, you know, the mid, you know, the tens, okay, 2010 roughly, okay. That was after we saw this was the peak in the GFC, okay, and then we saw the bottom, and then since then it's been in this channel, okay. Broke out of it a bit in 2021, okay. That was a bit of a mini bubble post-COVID speculation, okay. Crypto was doing well in that time too, but now it's breaking out again, and it feels like things are heating up for AI. It's becoming more and more popular. But one thing I would say is that I don't think mass retail are even in on stocks yet. I think people are finding hard times, and that's what's confusing about this cycle, is because lots of people really don't have the capital to invest, but smart money does, okay? And who knows what economical changes will happen in the coming months that would send these markets higher, okay? And maybe it's just something as simple as the Digital Clarity Act, okay? Once the Clarity Act comes through for crypto, that could just send it on a big catch up with the stock market. I mean, back in 2024, if you look here, okay, where is it there, right? See where the stock market was climbing up all that time, okay? Crypto was having an awful correction throughout majority of 2024, okay? While the stock market was trending higher, crypto was trending lower. And it wasn't till just around about just before the elections that crypto just rallied. It rallied hard, you know, from October to about December, okay? I think maybe even just till after Christmas, it rallied hard. Okay, and within those 2 to 3 months, we saw significant gains in crypto. We saw the meme season of the late 2024, and it was fantastic. Okay, so stock market's not done yet. This is proven. And this is the Fed balance sheet, okay? You know, when it's going up, that's easing, okay? When it's going down, that's tightening, okay? You don't necessarily need to see easing, okay, to see a good bull cycle. Look at this, 2017. Look what's going on there, okay? That was a fantastic time for crypto, okay, and the stock market, yeah? Okay, it was better in 2021 when, you know, it was, you know, the easing was going crazy like that. But so if we didn't see easing in 2017, but you was able to see a fantastic bull market, but now what do we see here? We see easing, okay? This is not tightening, okay? The Fed announced it would stop tightening back in December 2025, and they've stuck to their word. They're continuing to ease. Whether you want to call it, you know, TGA and plumbing and all of this sort of thing, and it's not real QE, whatever it is not tightening, and this is positive, okay? And we can see that in the stock market. So all the crypto guys are going, we want QE, we want QE. Well, it's kind of happening, and it's happening in stocks, but we're not seeing the gains in crypto right now. The other bit of FUD that we see, okay, is inflation, okay? And we know that inflation has been driven up by the prices of oil. Everyone knows this, okay? Now, oil is starting to come down. The new Fed chair, Kevin Walsh, gave, according to the media, a hawkish stance at the last FOMC meeting. But I believe that the rest of the Fed representatives are hawkish. Most of them are. But I believe he is Trump's guy, and he's a smart guy at that as well. And he knows inflation's coming down. That's why he didn't give his views. That's why he didn't put his dot on the dot plot, okay? Because he knows that inflation will come down with this price of oil. It will lag behind it slightly. So over the coming months, as we start to see lower inflation prints, I believe that it will be shown that that was a shock just because of the oil crisis in Iran. And fingers crossed, that's all over in Iran, because I'd like us to just get on with business, okay? Yeah, but oil highs can lead to market downturns. But where oil has pumped from the lows, it has preceded bull markets in 1999, 2002, 2007, 2016, and 2020. It's clear that 2026 was a significant pump from the low. After initial shocks, there can be a new normal with trending higher oil prices. Okay, look at this. Okay, 2020 was a shock. You know, it was down low. We had a shock in oil prices. Okay, and then it started to trend up. But all through this time, this was in late 2020, 2021. That was a great time to be in the markets. Okay, let's find another one. Okay, 2016. Okay. Oil trended higher. It was a great time to be in the markets for 2017. Should we check some more? Okay, right. 2007, yeah, came from a low and then went higher. Okay, all that time was good for the markets. Let's see what happened around the dot-com bubble. Okay, 1999, a shock from the low. Okay, climbed up all the way into that end of that dot-com bubble. Okay, so anyone that's fudding everything because of this oil, it's shocked from the low, okay? It's corrected. Chances are you could see a new normal in oil prices, but because it's calm, it's stable, okay? There's no one to say that you're not going to get more inflation towards the end of the cycle. You will do, but it will be that the shock is over, okay? And with this steadiness, with this calmness, you can see lower interest rates as well. Okay, and we don't really need to see lower interest rates. It would be good, but keeping it steady is just the same. You just don't want to see hawkish stance. You don't want to see hiking. And if you're a regular viewer of my content, you know I'm a big enthusiast when it comes to the ISM. I mean, look, just to cut it short for like people who have not seen this much before, but I'm sure most people have now. Yeah, 2021. High on the ISM, high in the markets, 2017, yeah. You know, 2014, 2015, it was high up there just after. That was 2009, 2010. That was when the stock market bottomed after the housing crisis, okay? That gave it the rally to recover, okay? You can go back to dot-com bubble, yeah. Yeah, high ISM is good. Low ISM, you know, if it's the ISM is low, probably a good time to accumulate. Okay, if the ISM is extremely high, above these 59 levels or around these 59 levels, you know, you want to be taking profits up there, probably on the market, especially if you're seeing it a strong move like that. Now we're only at 54, okay, and I'm going to get more into this as we go on through the video. But first, before we carry on with the content, if you really like what you're seeing, I'd really appreciate a like, a subscribe. Okay, it really helps me grow this channel. I've been away for a little bit because the markets were boring and sideways, and you know, I'm feeling like a time is coming now. I feel like we are going to reach a turning point soon. If the markets go a little bit lower, so be it. Just DCA, and you know, take those opportunities, because I believe this is an opportunity of a lifetime to be in these markets. When these markets are finally cooked, okay, it'll be pretty dire out there. So I'm taking the opportunity while I can. And remember, you know, when there's extreme fear and panic in the markets, it's a good time to accumulate. Okay, you don't have to go all in, yeah, but DCA is the best way. Let's carry on with the content. And first of all, just got to give a little bit of credit to the 4-year cyclists, okay, because I can see why they feel like it rang true, okay. You know, you've got these halvings to tops, yeah. You know, this one was, you know, 536 days. The last one was 548 days. The last one was 526 days. So, you know, and before that it was 369 days, okay. Genesis block to the top was 919 days, okay. That's before the halvings, okay. So halvings to lows, okay. First one was 993 days, okay, close to 1,000 days. Next one was roughly 900 days, and then the next one was just over 900 days. Currently, we're now 800 days since the halving, okay. Have we found a low? You know, could this take us for another 100 days, another few months? You know, that'll be into the end of this year, okay. Well, another few months from now would be, well, another 100, and say it was another 120 days. Another 4 months from now would be roughly October, end of October, okay. So, and then that would be tying in with the 4-year cycle theory, okay. But the average to low is 966 days, okay. So that's nearly best part of 1,000, okay. So it's like more like 200 days. So that's more like 6 months. They're talking into early next year, okay. I just don't believe it's going to take that long to find the low. I believe even if we go lower, that's going to happen way sooner than that. That's going to happen this month, next month, okay. If you get the next lower low down, yeah, maybe you do get to these, you know, low 50,000s, okay. Maybe even a bit lower, okay, as some are calling. But I'm seriously doubting it due to the extreme fear and all the other positive signs we are seeing in the markets, okay. You know, stock market could correct. Maybe that's what pulls us down that little leg lower, okay. But I believe it'll be a short-term correction for the stock market, and then crypto might follow on in suit. But you know, crypto's been decorrelated from the stock market for a while due to the AI stuff. So, you know, who's to say that the correlation has to continue down? I mean, the stock market pulled back a fair bit the other day, and crypto hardly moved, you know. So, you know, crypto down about, you know, 5% or something like that, and it was a nothing burger. Now moving on to Bitcoin, okay. So as I've highlighted in other videos, due to the theories of WD Gann, okay, Bitcoin likes to spend periods of several weeks or several months, okay, in areas, okay, like it did in 2024. That was several months, okay. It's done that in 2021, yeah, if you conclude all that top. But if you look at all of these little periods, and do you know what, there's more than the ones I've highlighted here. You can get right into the weeds with this, okay, and find that there's so many, several weeks, okay, several weeks, you know, and several month periods, okay. Now what I was suggesting in my last video a couple of months ago was that Bitcoin had spent this several weeks down here and was about to make a move up. Then it did make that move up, okay? And then I was like, right, it's taken that several weeks there. I believe it's going to take several weeks to do this bit, okay? Then it's going to find a double bottom, and that'll be several weeks as well. Now, it is a lower low at the moment, but you know what? You know, charts are so unpredictable. They pull out patterns that you have seen many times before. They pull out patterns that you've never seen before. Okay, and you know, maybe there is a chance that this is a lower low of a kind of like a W pattern. You know, that just last flush out to flush out the all the longs and everything like that. But you would want to see this move up in the next. So this has already been down here for like 3 to 4 weeks, okay? And now you're talking about another 3 weeks here, which would be take around mid-July. What news have we got coming in mid-July? Well, we've got the Clarity Act. We should hear some news on that. We should be a bit more confident with the Iran situation. Inflation should be starting to come down. We should have had another ISM print, which potentially could be higher, could be above forecast. At the moment, they're forecasting it as 53.7, currently at 54. But the last couple of times we've seen some above forecast prediction results. Okay, now I did have this marked out as my key support and resistance, so I'm happy to say I was wrong that it was going to hold that. But really, I've also always said that this area here, where we spent so long in 2024, I don't think will be broken. Okay, and you know that does give me a lot of movement down here to 49k. I just don't see Bitcoin ever going lower than this again. Okay, and that's so. If you ask me whether we're here or whether we're here in the future, this will be seen as a great time to buy. You'll see this. You'll be zoomed out. Yeah, Bitcoin will be up here somewhere, okay, 200, whatever, in the years to come, okay, and you'll look at this dip and go, I wish I bought that dip, okay, just like you'll say, I wish I bought there, I wish I bought there, I wish I'd bought there. It'd be one of those moments, okay. I'm pretty confident in that. Now, you know, not to keep going on at the 4-year cyclists, okay, but it's just a theory I cannot get on board with this time. I mean, it might play out that it does bottom in October. I'm not saying it can't, but what I'm saying is the data does not connect, okay? And when you look at the stock market, they're making new highs as recently as like in the last month, okay? And you've got so much going on for AI. The housing market hasn't collapsed yet. We've got the business cycle, which is the ISM. I've got the ISM down here, okay, you know, just to show, you know, it's not had a long life with crypto because crypto is so young and fresh, okay, but these peaks in the ISM were the peaks in, you know, crypto before, okay. This is a total crypto market cap chart, okay. Now, when Bitcoin was making its peaks, okay, and I would say the peak, the mid-cycle peak of the crypto market was around December 2024. Although you can see it's higher here, that was due to Bitcoin's movements, okay, and a couple of standalone cryptos. In general, the whole crypto market saw its peak in December 2024. Okay, that's when you look at the RSI. I'm not going to bring up the RSI now. That's when you see the higher readings. That's when you saw the highest readings in all the indicators that could possibly help you call a top in the markets. Okay, and they was not overheated. Zero of the favorite top calling indicators were called for that top, okay, and they certainly was not called for that top. They was even lower, okay. Now at that time the ISM was still riding low, okay. Now the ISM is starting to pick up and Bitcoin has not really seen a good movement with this ISM, okay. So it is, you know, it needs to catch up at some point. And look at what happened before, okay. The ISM, okay, yeah, it started picking up. Here we go. Yeah, started picking up here. Yeah, and crypto didn't really start rallying until after. Yeah, it started catching up after. Okay, same thing happened here. You know, ISM was moving up. Yeah, and then the crypto really started to get going. Okay, is when it starts getting over those 52 levels, which we're above now, and I'm going to show that in more charts. But first, another look at the stock market from a different view. Okay, this is the Russell 2000. Okay, the top 2000 lower cap stocks in the US. Okay, now when the ISM gets above 52, this is when you start to see expansive moves in the Russell 2000. Okay, we've seen that now. Okay, all right. The Russell 2000 had broken its all-time high, but when the ISM got above 52, we started to see the big rally, similar to what we'd seen in 2020. Okay, yeah, that's when it started to really move. Okay, same for 2016. Okay, and the same for 2013, and the same for 2009. Okay, this has been a very good indicator. Okay, so we are just seeing, yeah, the Russell 2000. Look how many months these moved for before, yeah, like multiple months. Okay, at these tops, multiple months, like I'm talking almost a year-long rallies, yeah, year-long rallies. Okay, we're at the moment where literally 1, 2, 3 months into it. Okay, so we could be going well into, you know, end of the year, later into 2027 for all we know. Okay, and if it's a dot-com bubble era type thing, I mean, I don't think the Russell was around back then. It wasn't, came out just after. Okay, so we haven't seen that type of move in the Russell yet, so who knows what would happen once the stock market starts to diversify into all the new startups that are all AI related, and you know, that's when all the FOMO kicks in. Everyone's making money in the stock market, everyone's making money in crypto, the retail investors come in their droves, and you know, there's all going to be all the signs of euphoria, mass euphoria, and that's what I hope is going to happen. That's what I'm confident is going to happen. Okay, we're not seeing that yet. Yes, Bloomberg's talking about AI bubbles all the time. Who's watching Bloomberg out of your friends and family right now? Okay, they're not, but soon they will be. Okay, soon those people who don't invest will be contacting you, who know you play around with the markets. They're going to be like, what's going on? What should I buy? This, should I buy that? When you start getting that, that's when you know it's hot. It's not hot right now, honestly. And since my last video, nothing's changed much for gold. It's still coming down lower and lower. We'd indicated that, you know, it had found a peak around that 4618. Okay, this could be a correction that lasts a while. Okay, and then we look at copper. Yeah, copper usually runs with the ISM. Okay, and look what it's been doing. So yeah, putting that on the monthly, and we're putting that with the ISM as well. Okay, and then we're going to see this. Okay, so look, yeah, the ISM broke above 50. Copper's starting to broke a new all-time high for the first time since, these things keep getting in my way. Okay, 2022. Okay, so this is the first, well, I know it's had some spikes above, but this is a confirmed breakout now. Breakout, retest, move on. Okay, and look, we saw a solid move back in 2020 and 2021. We saw one in 2017. Yeah, copper moves with risk markets. It is the risk. It's down the risk spectrum from gold and silver. Okay, so we could be seeing gold pull back. We'll see copper versus gold run. Let's take a look at the copper gold right now. Now, I know you're thinking, you know, I just like crypto, you know, I just like stocks. Why does this guy keep talking about copper, gold, this ISM stuff, and all of these sorts of things? It's because I'm a very strong believer in cyclicals, okay? And when I can see correlations in charts that match up over decades with cycle peaks and cycle lows, I hold far more weight on that than whatever every Tom, Dick and Harry's telling you on YouTube about, you know, this bit of FUD, that bit of FUD, you know, sailors like a Ponzi scheme, and, you know, it's all going to collapse, and, you know, AI is already in a bubble right now, you know, everything's overheated, you know, we're not seeing quantitative easing yet, you know, the Fed's going to hike interest rates, because everything's just a story. Everything's just, you know, if you just believe in all of the negative stuff that you hear, you just might as well not invest, because you're just going to get taken on this news journey, you know, and who trusts the news anyway? I mean, do you trust mainstream media? I don't. So yeah, I'd rather follow things that I can visually see in charts. And then if I'm listening to news, I'm like picking it apart and thinking what I think is true and what I think is false. Okay, and you can say maybe there's confirmation bias there, but I'm following charts that have done things over and over again for decades. And you know, and that's why, you know, I used to be a strong believer in the 4-year halving cycle. And you know what? Part of me thinks that, you know, if it's right, well, that's pretty cool because it just happened again. But I can't roll with that because I'm seeing way more important data than what some guys on crypto Twitter or X are telling me about what happens to Bitcoin every 4 years, and it must always happen again. Because I'd rather go with stuff that's like ages old, you know, like the Shemitah cycle, the 18.6 year restart cycle. There's evidence of those going back hundreds of years. Okay, so do I think the crypto cycle could be playing with a lot of people, you know, a lot of, you know, emotional investors? I think it could be. I think it could be. Okay. Anyway, moving on. Let's go back to this. Okay. So look, yeah, copper has found a low. This is copper versus gold. Yeah. Copper has found a low against gold. It looks like perfectly in time with the ISM. Yeah. Like it did back then in 21, like it did back then in 2016. Yeah, like it did in these other times. Yeah, look, all the lows on the ISM were the lows on copper gold. So does that look like a low? Yeah. Look at the monthly. Yeah, 5 and 13 EMAs crossing. It's going to get up here to this 50 EMA. Once it gets past that, you know, it's just going to be craziness. Could it be lower lows? Sorry, lower highs. It could be, because this thing looks like it likes to make lower highs, but it only has to make that bit of a move, really, doesn't it? And it could be an exciting bull run. Okay. In a moment, we're going to go and have a look at some altcoins. I've got an interesting way to look at them. Okay. But before that, this is probably one of the most important charts I like to look at regarding crypto. Okay. Now, it is noisy. You're probably looking at your screen going, I don't know where to look. Okay. Right. So let's really take our time with this one and just try and break this down. Okay. So gold averages 90% drawdowns against Bitcoin. That's the key point you need to remember, right? And it has done it in every cycle. Okay. Look, done it in 2011. Yeah. It done it in 2014. Yeah. Went down 99% against Bitcoin. It done it in 2017. It done it in 2021. Okay. This is the ISM along the bottom here again. Okay. Every time it did that, now I'm going to have to zoom it in a bit for this, so sorry if it gets a bit messy, but bear with me. This is probably one of the most important things you can see. Okay. Yeah. Because when it fell into a peak on the ISM. Yeah. Like it did, it fell into a peak on the ISM. Fell into a peak on the ISM. These ones look a bit clearer because you can see the mounds, but those were peaks in the ISM. Okay, 2017, 2018, fell into a peak of the ISM. It fell into a peak of the ISM in 2021. Okay, now, yeah, and what the reason I've got all of these patterns here is because it always does these like a low, a high, a low, then it tries to make another high again and rolls over, and it did that in all of them. Look, you can see the pattern's there, you can see the pattern is there, you can see the pattern is there, and you can see this is the biggest one, the longest one to play out ever so far. Okay, this one's been going on since it bottomed in 2021. It's made a peak around 2023. It's made another low around 2024. Okay, but gold has not collapsed against Bitcoin yet. And as we've seen, as I highlighted earlier in the video, gold looks like it's found a local top. Yeah, the correction is heavy, it's hard, it's coming down. Okay, and it might get a bounce, and it might range, and it might do whatever it wants to do. But I don't think it's taking out that high again for quite a while. Okay, and that could be a year or two. I don't know. Okay, but in that time, yeah, I believe Bitcoin will run. I believe Bitcoin's at a low right now. Whether it goes a little bit lower or not doesn't matter. It's going to be bottomed, and gold is going to be topped. Therefore, what's going to happen is this chart is going to go down. Yeah, that almost seems like fact to me. Okay, now that correlates with the ISM. Okay, as we've seen everything else that correlates with the ISM. So the ISM probably continues going up. Gold will come down against Bitcoin. Gold will drop 90% against Bitcoin. Yeah, like it has done in the past. And we'll, in another video, we're going to go down to what that could mean for price against Bitcoin. How low can gold drop and how high can Bitcoin go in that type of move? Okay. Average time would say late 2026 or early 2027. So I recommend you bring that up on your charts. Do ZAL USD, so that's XAU USD slash Bitcoin. Okay. And you can go and analyze this for yourself. It's honestly, it's one of my favorite charts. Now, something else I want to look at, and you know what, some people might not hold a lot of value in this at all, but I find market structure very interesting. The way it repeats things over and over again. Okay, and this is like very typical in a lot of charts you see. So this is Bitcoin, right? Okay, this was the 2017 bull run. Okay, into the 2018, 2019 bear market. Okay, and then what you saw a top, a low, you saw a range of 3 highs and a couple of lows, finishing with a lower low, okay? Not lower than there, but lower than this pattern, okay? Then it was off to the races. Now let me flick through some charts, okay? So that was Bitcoin's 2019 mid-cycle top, okay? Now, what you can see is Ethereum. Now, Ethereum done this as well, kind of thing, in the last cycle as well. Less moves than Bitcoin, but more sharper moves. Now, the patterns are not always exactly the same, but they are super similar. Okay, so you had the top, the low, couple of highs, couple of lows, off to races. Okay, now what do we see for Ethereum now? Okay, we see a top, a low, we see 3 highs, a couple of lows. Okay, could that be off to the races? Okay, now let's have a look at some other charts. Okay, Solana. Okay, Solana, top, low, 3 highs, 2 lows, could be off to the races after that. Okay, now I'm not trying to call bottoms here, but maybe, just maybe, that could be the case. Okay, Chainlink, yeah, top, low, very big low accumulation. So they don't always look the same. Okay, but quite often with these 3 tops, 3 lows, or 2 tops, 2 lows, something like that. It's just chop. Okay, you've got a top, a bottom, chop, mid-cycle tops. Yeah, then you get the big cycle top. Okay, that's what I'm looking for. AVAX, yeah, top, low, yeah, long bottoming out, couple of highs, and there can be higher highs and lower highs. It all changes. Okay, but nevertheless, chops with roughly these 5 or 6 moves. Okay, near protocol, yeah, top, low, and this is probably one of the most bearish. Probably Cardano might be one of the most bearish looking ones. Actually, we'll look at that in a second. Top, low, yeah, couple of tops, well, 3 tops, now 3 lows. Okay, yeah, could that be the pattern? Okay, we've just done AVAX already. Okay, Cardano. Okay, yeah, looks a bit different this one. Okay, bit lower, very similar to NIRS probably, but a lower low. Yeah, strong lower low. Lots of FUD going on with Cardano right now. But will it survive? Do you believe Cardano will survive? Drop a comment, yeah, below. Okay. You've got the high, the low. You've got 3 highs, 3 lows. Okay. So whether it's a lower low or a higher low, whatever, higher highs, lower highs, doesn't matter. Okay. Similar pattern. And we go back. Okay. Now, everyone will think, looking at this right now, let's zoom in on this, right? Let's go. It's over for Cardano. Look at it. Lower lows. It's done. Okay. Let's see what happened to Cardano in the last cycle. Yeah. Okay. This will be interesting for you. Might make you bullish on Cardano. Okay. High, low, 2 highs, and then another low, 2 lows. Yeah. With a lower low, a deep lower low. Okay. This is a deep lower low as well, okay? And look what Cardano did after that, okay? Yes, it's a larger market cap now. I'm not saying it's going to do that type of move, but what you think that's impossible for, you know, you would think that was impossible, yeah, from there, okay? Maybe you think that's impossible from here. I'll leave that to your own thoughts, okay? Now, looking at others versus BTC, okay? Now, yeah, I know we've only got a couple of highs to go on here, but could that potentially be a high for others against Bitcoin in this cycle by 27, 28? You know, who knows? Maybe it's sooner, who knows? But maybe it doesn't happen. We don't know. This is the game we play, okay? But look, yeah, it's found a low, yeah. Does it find a high, then a low, then off? This is looking like a strong bottom. It's been holding this now since, apart from that wick down, which was the 1010, was that the October one? Yeah, it was. That was when the big liquidation event happened. 20 billion raised from the crypto markets, okay, in leverage trades, okay. Really though, apart from that wick down, it's held since June 2025 against Bitcoin. It's been in a bear market against Bitcoin, yeah, since 22, okay. And this looks like a bear market bottom, taking a long time there, okay, starting to rise up as at the top of this range. Yeah, this is a potential mover, okay. If Bitcoin's bottomed, Bitcoin can find its way up a little bit, this thing's going to carry on moving up at a faster rate. And you can see how low some of the prices are for altcoins right now, with extreme fear, panic, FUD everywhere. Yeah, Clarity Act gets passed, maybe that goes off to the races. Yeah, total free, okay. Yeah, very much still in a bear market since 22. Yeah, okay. But yet again, it's holding since June 25. Yeah, and this is a higher low. Yeah, is it going to break trend? It's getting close to it. It's tapped it. Yeah, this is a trend going back to there, 22. This you know, it's make or break, isn't it? It's make or break. But that's why you have to believe in whatever you can see in the markets and analyze lots and lots of data. I mean, Bitcoin dominance. You know, we've been talking about Bitcoin dominance been here around 58, 59, 57, whatever percent, and around 60%. You know, we had these scares that, oh, maybe dominance was going back up when it went to 63. No, it come back down again. Or maybe it was breaking out again. No, it's come back down again. It's in this range. It's been in this range for a while. Altcoins are in the waiting room, okay? And I don't believe Bitcoin dominance. I've always said this in every video. Go back and check every video I've done for over a year. Okay, I've always said Bitcoin dominance will not finish the crypto cycle at the highs. It finishes it at the lows. Yeah, when there's mass speculation. Yeah, there hasn't been mass speculation. Okay, speculation is human nature. Yeah, it's human nature to go further out the risk curve. And it hasn't happened in crypto for this cycle yet. So this could drop down, yeah, over the next year or so, okay? Who knows how long it takes? Maybe it's a sharp move down, yeah? Maybe it just collapses, yeah? And we get it over a few months into the end of the year. Maybe it goes into next year. We do not know, okay? But I predict it will happen well before this halving and election. Well before, okay? And then when it gets to these 40 levels, yeah, this is profit taking zone. Yeah, this is where you start selling your altcoins. Whether you want to go back into Bitcoin for long term, whether you want to take some Bitcoin, some US dollars, maybe you want to get completely out because you've had a terrible time for the last few years. Whatever you want to do, yeah, take some profits if Bitcoin dominance gets down here on your altcoins. Okay. And look, yeah, this was the ISM in yellow. This was Ethereum versus Bitcoin. Yeah. The ISM in 2016, 2017, going up. That a little while later, that's when you got the serious move in 2017 for Ethereum against Bitcoin. And that's when other altcoins run as well. Yeah. Yeah. So 2020, yeah, the ISM was moving up. Ethereum was moving slowly. Then it got faster. Yeah. And it picked up. Yeah. Now the ISM's going up. Yeah. We had a bit of a bottom here with ETH versus Bitcoin, okay, and maybe this is a higher low about to form, and this is about to go off as this ISM starts printing higher. You know, there's all of this can happen. And when extreme fear is around, I just honestly think it's a good time to DCA. So that's what I've been doing. Okay. Extreme fear, DCA. Extreme greed, take profits. Okay. Not saying to sell all your bags or go all in at any of these periods. You know, none of this video is financial advice. But if I see extreme fear, I'll just keep DCAing it. Okay. Especially when I believe the cycle is still at a midway point. And as I've hinted to a couple of times in this video, okay, I think a lot is waiting on the Clarity Act. I think that's one of the only reasons that crypto's not running so hard at the moment. I think a lot of money is being absorbed into IPOs such as SpaceX, and the AI trade is very, very popular right now for the smart money. I still don't think the mass retail are really in. You know, the people might be in investment funds and, you know, pension funds that allocate to stocks and shares and everything like that. But I don't think mass retail are buying individuals. I don't think mass retail are getting on to trading 212 and buying, you know, a basket of different stocks. You know, I believe a lot of it's institutional capital keeping that moving. And I believe that there'll be a time where crypto will be seen as the money for the new world of technology and AI and everything like that. The AI agents will need to transact via smart contracts, and that's when a big popularity will come to stable coins, to crypto, to blockchain technology, and it'll all be one thing with AI, and it'll be a huge tech bubble. That's what I believe is happening. But quickly, before we go, let's have a little look at what Cynthia Lummis is saying as she gives us an update on what's going on with the Digital Clarity Act.
Now, I want to get into the Clarity Act. You've been such an outspoken supporter of the Clarity Act and digital assets legislation, but we know that the House passed Clarity almost a year ago. What is holding this up in the Senate?
We've been negotiating on the Clarity Act hardcore since last Labor Day. And it's been an arduous process. As you know, the major monkey wrench was thrown in it when the Genius Act revisions that the banks wanted became a huge issue for us. And I'm really proud of Senator Also Brooks and Senator Tillis for working with the banks to find that compromise. We're still working a little bit on DeFi. We're working on, that's illicit finance. We're working a little bit on ethics, but we've been working through thousands of hours in negotiating, thousands. And we're finally to the point where we're going to put out a text over the July 4th and give people one last really thorough look at the bill. And then we're moving in July.
You're going to move in July, but the banks are fighting it. I spoke with Jamie Dimon just a couple of weeks ago, and he was not happy with where the Clarity Act is right now because he is expecting that the crypto companies will be able to pay rewards, and he says it's not fair. They're not banks. They are not insured the way banks are. Here's our exchange. Watch this, Senator. So are you happy with the way the Clarity Act is turning out?
No. No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way. And the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And but he's the only one. Yeah. And he's spending hundreds of millions of dollars in Washington this thing.
Okay? He said he's representing the whole industry.
Full of
Senator, your thoughts?
Well, with all due respect, Mr. Dimon is mistaken about the Clarity Act. He needs to read it over July 4th. He will see that his concerns are addressed in Section 301. He thought there was a big loophole there. We closed what he saw as a loophole. We've made changes. We have AML and I think 16 provisions, Maria, to protect against illicit finance. We have multiple provisions addressing the application of AML to digital assets. He's simply mistaken about the bill. I strongly encourage him to read the bill. He can sit in his nice chair on the beach over the 4th of July, and he needs to read the bill.
But Senator, isn't it true that the crypto companies will be able to pay some kind of a reward if, in fact, you're part of a special program or you're in a membership program? They will pay rewards.
Yeah, absolutely. And the criticism that the banks had is that they didn't want the payment based on a balance or something that looked like interest, a bank product. And so that was changed to allow for rewards that are not attached to a balance. So it is differentiated with what banks offer. And that is the current status of the bill.
So there you go. July 4th, big date for crypto. You know, doesn't mean it has to be the final decision date. We're going to get moving in July, Cynthia Lummis says. And, you know, she's been right on everything else so far. I think Jamie Dimon's the one who's full of shit, if you ask me. As we've seen him do U-turns before, you know, he will fight this. And then, you know, as the saying goes, first they laugh at us. Yeah, he called us, called crypto a pet rock and all of that. Then they fight you, yeah, which is fighting this Clarity Act now. And then you win, okay? And that's what crypto is going to do. It's going to win. Okay, so lots of positive things potentially on the horizon. Okay, as I've shown, I've given you my case today for why I think it's still mid-cycle, and there's still plenty of gains to come. If you've been riding through the rough waves so far, the tsunami, in fact, and you're still here, you're probably going to make it. Okay, just make sure you stick to diversifying, using your hardware wallets, yeah, keeping your coins safe, okay, and just hold, yeah, DCA, and then when the time comes, take profits. Obviously, that's not financial advice, but that's the way I do things, okay? So anyway, hope you liked today's video. Hope you can join me for the next one. See you soon.